All right, traders, I'm going to be breaking down the top 3 option plays for this week. This is going to show you how to determine when to be long biased, when to be short biased, the key entries, where to be getting in, where to be setting your price targets, and where to be setting your mental stop losses. I'm going to walk you through how to trade the best setups at the best prices. We're going to be doing an in-depth price action technical analysis on the SPY, along with Tesla and Rumble stock. These are going to be the top 3 that I'm going to be trading into this week. So first things first, let's get started into the current updated price action analysis on SPY and the potential option plays for the SPY. Then we're going to be going over Tesla and RUM. Make sure you stay to the end. I'm going to be sharing with you the money-making information on these lucrative option trading plays. These are going to be scalping opportunities where you get in, you get out. In terms of the expiration, I'm going with the closest expiration on the option chain. And in terms of the strike price on the option contracts, I'm going with the ones that are at the money, barely out of the money, basically the ones closest to in the money, but aren't in the money. So let's get into it. So in terms of the SPY has this key previous support. You could see right here at this $388 level to $390 level. Also, there's a gap to fill above on the SPY at $390.12, right? So you got previous support, 388, 390. You have a gap to fill at 390. You can see there was a gap to fill right here at 388 towards that previous support, reacted as a resistance. Big downside potential for the short term. So your key make it or break it level is going to be the gap. It's going to be this zone that I'm going to give you. It's going to be this 389, which is the closing price of Friday. And it's also going to be the gap to fill above at $390 and 12 cents. That's going to be the overall zone. If the SPY breaks above that zone and turns the high of that zone 390 into support, then it's going to go bullish. It's going to have a nice little micro bullish move to this 395.80 to 396 zone, which should be a good scalping opportunity if it were to flip bullish in that sense, right? But that's what it'll be on track to do if that zone reacts bullish. Now, if the SPY can top out at $390. As you could see, the gap actually filled above during extended hours. Ever since it filled that gap, which was at 390.12, it's been having small pullbacks, forming lower highs. It just had a small little gap down, as you can see, as extended hours trading has been open. So basically, if 389 can turn into a resistance level and 389 can break down, the bears will be in complete control and flip this for the micro, right? And I mean, just look at what happened last time, right? You had this previous support with nice upside potential. It gaps down, it fills the gap right here. Once it fills the gap, massive downside potential for the micro. So for the bears to flip the micro, because I mean, overall, for the short term being, SPY has been going up within some time for the short term being from like mid to end October. Now, with that being said, for this trend to flip and for the bears to gain control, they need to turn 389 into resistance. They need to turn that lower end of that channel I gave you, 389, 390. They need to turn 389 into resistance. It needs to break below. It needs to form resistance. If that can happen, then we're going to see a hard sell-off to about $380 to $382, right? So those are your short-term levels that I want to mention. Your zone is at 389 to 390. If it breaks above 390, goes bullish, reacts as strong support, it's going to go to like 395, 396. If it breaks below 389, turns it into resistance, goes bearish, you're going to be heading back to about 380, 382, low 380s, right? Those are the overall micro levels. What you need to understand about the SPY is this was just the 52-week lows, right? And this has had a massive pump without really any massive pullbacks yet. There's been some small little micro pullbacks. So it is due for some sort of micro pullback. For it to be now, it needs to stay below 390 and it needs to go under 389. If it can just turn 389 to resistance, goes bearish, then it's super bearish under 389. And then that's when you're going to see a nice move, because look right here, it went from 389.31 all the way down to 377. So there's going to be a very nice move to the downside if we can crack below this 389 level, right? So that's what I want to bring awareness to in the SPY. Now, if it breaks above 390, bulls remain in control. It goes to 395, plus there's a gap to fill above. One more thing that I want to mention in terms of swing trading is the SPY has filled this gap. So with that being said, if the SPY forms a bearish candlestick, because I know a lot of you have been waiting to swing trade puts, if it forms a bearish candlestick on the daily, something like this, a red bearish candlestick, doesn't have to be big. It could be a smaller one like this, right? It could be a smaller one like this. As long as it forms that at that 389 zone, then I would be willing to swing trade puts in a sense, right? That's what I wanted to bring awareness to heading into tomorrow, right? So that's what you need to understand in terms of bulls and bears remaining in control, right? So we're just going to go over the overall short-term levels for the SPY. Make sure you subscribe to the channel because this is going to be updated on pretty much a regular basis for the most part when I feel it's important to release these videos with new updated price action analysis. But yeah, that's what I want to mention in terms of the SPY. Very, very simple. So we're going to keep it at very short-term micro-focused for now. And in terms of our next play, let's go over the top option plays. So Tesla, in terms of Tesla, this is what I want to bring awareness to. This is the inverse of Tesla, Tesla Q. So basically, you can see if you're looking at Tesla Q looks pretty bearish here, which means Tesla looks pretty bullish. So this is basically the inverse of, Tesla. And you could see right here, this is what I wanted to bring awareness to. You have this bearish candlestick, this bearish wick right here. You have this bearish wick right here. And it tends to sell off within some time, meaning Tesla tends to pump. Now, what I do want to bring some awareness to is don't get faked out. We're still trying to determine what this is going to be. So you have this green candle right here, you have this green candle right here, and then you have this red bearish candle, then you have this red bearish candle, but Tesla Q goes up and Tesla goes down. So I think we'll know by tomorrow in terms of who's in control of this trend. But basically, if Tesla is up tomorrow, the overall trend should be bullish. If it's down tomorrow, the overall trend should be bearish. For this overall week, in a sense, that would be my kind of short-term opinion on Tesla Q and Tesla, right? So if this is down tomorrow, super bearish on Tesla Q and super bullish on Tesla. If this is up tomorrow, then we're going to see a flip where Tesla Q starts to go up and Tesla starts to drop down. Based off the charts, though, if I were leaning on opinion, this looks fairly bearish here. This Tesla Q looks fairly bearish. It's turning previous support into resistance. It's turning the gaps into resistance. There was a gap to fill above right here, turned it into resistance at these all-time highs. There's multiple gaps to fill below. Tesla Q is starting to look super bearish, and Tesla is beginning to look overall bullish in a sense. I think by tomorrow, we'll have that determination of, who's in control, right? Because that's just my opinion. We got to see how the market reacts tomorrow and whether it's green or red. That will set the tone overall for next week. But, this is fairly looking bullish. We have multiple gaps to fill above on Tesla, and your resistance right here is attempting to turn into support for 2 days in a row, basically. So it's looking overall bullish as long as we can stay above, I would say, 222. If we could stay above 222, 225, that zone, Tesla's going to be overall bullish to start to rise and fill the gaps. That's another one I'm keeping a close eye on. So yeah, in terms of Rumble, so, obviously for the long term, I'm bullish on this stock. But in terms of I would say the next month, I think this is setting up for a passive income swing trade. For those of you who are more advanced with trading options and you do spreads, this could be a good situation to be doing spreads on, right? So if that's something you want to look into, I saw there was a lot of heavy volume with a spread option on this. It had 2,500 on the call and put side. Someone did a spread on this. I believe it was one of the November expirations, and it was at the $15 strike if you want to do some research on that. But basically, someone went super heavy on spreads. There was over 2,500 in volume. And this is overall bearish. I don't really see this continuing to rise. It's beginning to look bearish. It's a tad bit too early to say, but overall, I'm leaning on the bearish side. The only thing that I dislike about going bearish is there's a gap to fill above at here, which is 1681. The true best price to short this or to buy put options or to do a vertical spread or whatever it is that you want to do, right? I'm just walking you through some price action analysis. So basically, if you want to use what I'm saying combined with your options trading strategy or whatever it is that how you're going to profit off this, whether you're shorting shares or whatever it is that you're going to do, if they even allow you to short shares on this yet. But basically, I'm overall bearish. And if it doesn't work around this $12 zone, then it's going to work at 1680. So if it can't collapse at 12, it's going to either collapse at 1348 or 1681. It's going to work 1 out of 3 of the times, but it should work within the first 2. But some of the reasons why I'm leaning overall bearish, and like I said, the reasons why I dislike being bearish is because, there's gaps to fill above. But this is why I'm overall bearish. This was just at all-time lows at 625. It's up basically 100% in a couple of days. It's due for a pullback, and your overall previous support is going to be right around here where I drew this zone. And as you can see, this zone is reacting bearish. This zone is reacting as a resistance level, right? So with that being said, you have this top wick. This isn't the most bullish candlestick. So basically what I could say about this one is if you were, looking into something a couple weeks out, like a month out, you don't go far out of the money, you don't do anything crazy, I think overall this will be on track to drop to about $9, I would say. I would value this at $9. That's what I would say. I'd value it towards this $9. There's a gap to fill below at 848. There's a gap to fill below at 716. Within the long term, I could see those gaps filling. Within the next month, it's going to be an interesting battle, but I'm leaning more towards the overall bearish side, heading into November for this stock. Just know if this $12 turns into a support, it's going to remain bullish and it's going to go to 1350. If it breaks above 1350, then it goes to 1681 in terms of scalping opportunities. 1348, best price to scalp puts. 1681, best price to scalp puts if you're trying to scalp. In terms of swing trading and entering something a little bit more midterm, best thing you could really do is wait for the first red day. I could see that happening tomorrow likely with this kind of candlestick. This setup really doesn't look bullish to me, but we have to see. We do have to see. It's just, it seems like it's a little bit too good to be true to just keep on going up. It dropped 50% very quickly, and then it spiked 100% very quickly. It's at previous support. It's reacting as resistance, big downside potential. So, yeah, but just know if it breaks above this, $12, 12.20 turns into support, then it is still bullish. And I would wait for the next level if you are in on some type of short position or where you're betting on it to go down. So that's my thoughts. That's my overall analysis for RUM, Tesla, and SPY. My favorite setup heading into this week, of course, is going to be the SPY. The SPY is setting up for a very lucrative opportunity. We just need to identify if it's going to react as a resistance. As of now, it's gapping down. It's trying to react as a resistance. So like I said, 389 reacts to support. It's going to try to go bullish. If it reacts to resistance, it's going to try to go bearish. This is truly going to be one of the greatest opportunities to be trading at the previous closing price because, not all previous closing prices are created equally. I genuinely believe one of the best prices to be trading at is the previous closing price. For example, I did this on Friday with AMC. The previous closing price was at this $6.50 level, and there was a call option at a 650 strike, and at first it was reacting bearish. It reacted as a resistance, sold off, reacted as a resistance, sold off. Once I noticed that, it kept flipping green, forming some support, nice doji support, I picked up some call options and they went up basically 100% within like 20 minutes. It was a crazy play. And all AMC did was go up 20 cents from where I got in. I literally got in as soon as it touched previous closing price because at the time, previous closing price right around here where I got in was reacting as support, doji at support, higher support. And then this little spike right here caused those contracts to go up a quick 50-60% within minutes. And if you got in right where I did, you would have been up 100% basically. But yeah, I truly believe the best thing we could be really doing is trading towards the previous closing price, trading towards the high end of the channels, trading towards the low end of the channels, best prices, best setups at the best prices. Best setups would be like those gap close reversals, those gap fill plays as well. And this is truly, like I said, not all prices are created equally. Not all previous closing prices are created equally. this is truly special because, like I said, this is strong support, strong support, strong support, nice upside, nice upside. As you could see, big downside potential when it reacts as a resistance, big upside potential when it reacts as support. We're at a key make it or break it level. We're in a bear market. This was just at 52-week lows. This was just at 348. It's due for some sort of pullback. It's up 41 points plus since 52-week lows, which wasn't too long ago. It's overextended. It's overbought for the short term. It's at an amazing price to buy put options as long as it reacts bearish, right? It has to react bearish. It has to react the way we want it to. We don't go solely based off the price. We go off of, that previous closing price reaction. So this is where the previous closing price is truly special because there was a gap to fill right here at this 388.55. And the SPY is going to have a gap to fill above tomorrow if it continues to go down, open up lower than it previously closed at 389 tomorrow. So based off of history, previous support reacts as a resistance, massive downside potential. Plus we're in a bear market, plus it's overbought, plus it's just been going up nonstop. It's due for some sort of pullback. So if we can get the right reaction at that previous closing price, that bearish reaction where it's forming gravestone dojis, it's forming lower highs, it's selling off, it's going lower, it's looking bearish, it's forming resistance, it's forming a rooftop, not a floor, then this is going to be one of those situations where the previous closing price will truly be the best entry. So I want to bring awareness to that. We're in a very special trading opportunity. And this is something, like I said, this is something that can make you a good amount of money. This can make you a very good return, and you're doing the right thing. You're trading the best setups at the best price. I mean, just look at the chart. We are truly at one of the best setups at the best prices. There was a gap to fill. It filled the gap, massive sell-off. Gap to fill, it already filled the gap. It's gapping down. So if that gap to fill above 389 reacts as resistance, forms lower highs, cracks 388, it's going to be a big sell-off, and the put options are going to absolutely print. And I'm bringing a lot of awareness to the put side because we are in a bear market and we are due for some sort of pullback. But with that being said, what matters is the reaction, right? History, you have to confirm that history is going to repeat itself. We can't just say that, okay, there was a gap to fill here and it filled the gap and it had a big sell-off. We're in a bear market. It should drop. It was just at 348. It's due for a pullback. It's overbought. That's great. And we're putting ourselves in preparation to be on the right side of the trade. But you have to confirm that history is going to repeat itself, right? That's what you have to do. So we're aware of what market we're in. We're aware of the history that could repeat itself. But as traders, we have to study the previous closing price. We have to study how the market is reacting, how the candlesticks are forming, how the volume is, how the flow is at these specific levels. And once it starts to give us a sense of direction, once it starts to form resistance, then we know when to buy puts. Once it starts to form support, then we know to not buy puts. And that doesn't mean to buy calls, it might look bullish at this level, but maybe we don't buy calls because there's not a ton of upside potential, or it's just too overextended, or we don't want to buy calls high. We want to buy calls low on dips, right? So maybe we just sit out, right? So you just have to understand the situations that we're in. And this is truly an amazing trading opportunity. If you are in puts, the max risk should be like 391, should not go above 391. But yeah, that's what I'm going to say. And those are my overall thoughts on the SPY. Like I said, not all prices, not all trading setups are created equally. This is basically the best setup at the best price. This is truly an amazing trading opportunity. And this is something where you can make some serious money, enough to easily join Trader Society just based off of this one trade. So yeah, I want to bring awareness to that, man. And this is a type of play where I would consider SPX, man. I'm telling you, I would look into SPX options on a play like this. So SPX is going to be extremely more volatile, but on the best setups at the best prices, if you're trying to make a really crazy percentage return and you're comfortable with holding a little bit longer, it's truly at the best price, and you think it's going to be a great setup, I would go at SPX. That's what I would do. This is going to generate a much bigger return if you trade SPX, but there's a time and a place to trade SPX. It's got to be the best setup. It's got to be the best price. And in this type of situation, I would be doing SPX options, basically an at the money strike. That's what I would be doing. So yeah, I'm going to be trading SPX tomorrow, it looks like. But yeah, and same day expirations. So with that being said, I hope you guys enjoyed this and learned a lot. I'm going to be wrapping up this lesson here. If you do want to join Trader Society, all the information is explained down below. It's going to be the first link in the description. If you want to check it out, as soon as you join the program, You get instant lifetime access to everything mentioned on the landing page. With that being said, guys, I will see you tomorrow within the chat.